Hello and welcome everyone to one more session by ACCA, where today's video is in continuation of our ATX UK ACCA exam series. So last video we discussed about basics of individual taxation, where we saw what is tax and what are the different types of tax and what are the category, right? There are three categories, that is savings, non-savings, and dividend income, right? All those incomes fall like what are the types of incomes that fall into it. So today we are going to discuss about the rate band of each of these categories and how does the calculation works for it. Okay, so without wasting any further time, let me share my screen and start our session. Okay. Okay. So for the sake of making this full ATX syllabus interesting for you, what I've done is in the left hand side we have concept being covered, and in the right hand side we have all the questions. We have all the practice questions which would make your concept much more clear. Okay. Yeah. So let's talk about tax rates. So I would firstly recommend to go through our previous video. I would attach the link in the description, or you can go and search it in our channel. So if you watch that, it would be much more beneficial going forward. Okay. Yeah. So firstly, there are three rate bands that are available. First is 30. First is still 37,700 pound. Okay. So it is 20% for non-savings income, 20% for savings income, and for dividend income it is 8.75%. Okay. If we go to high rate band, it falls between 37,700 pound to 1,25,140 pound. It is 40% for non-savings and savings income, and then for dividend income it is 33.75%. Next is additional rate, where the tax is as high as 45%. So if you earn 1 rupees, you will pay 0.45 to government. Okay. Yeah, this is how cruel world is. Okay. So if your total taxable income exceeds 1,25,140 pound, then you would be taxed at 45% for non-savings and savings income, and for dividend income it is 39.25%. So it is like bands, right? It is not like that if you have 30,000 pound of salary, you would be paying 20% of tax, and if you have a salary of let's say 80,000 pound, you would be paying totally 40%. No. So for 80,000 pound, you would be firstly paying till 37,700 pound, you will be having a 20 percentage rate, and above that you would be paying 40 percentage rate. And also you need to consider personal allowance, which we would be talking in our next session, whenever we are in, okay, most probably in the next session. Okay, so this is how the calculation works. So if you see, normally the dividend bands are typically lower. The dividend tax rates are typically lower as compared to our non-savings and savings tax rates. Okay, and this is why you see many businesses are trying to plan out their taxes efficiently. So what they do is they pay dividend such a way that firstly their salary is being covered by their personal allowance, and then above that they pay themselves dividend. Okay, so dividend has generally lower rate. This is 8.75% as compared to paying 20% on basic rate band. So this can be an efficient tax planning for you. But this is a separate set of discussion which we could have in any other video. Okay. Even if you consider higher rate, there is a good gap between dividend and savings income, right? So many directors plan out this way so that their tax liability is to the minimum. Okay. But I think the government also knows this, and in the recent budget they have announced that from the next FY they would be increasing the dividend tax rate to by 2%. Like for 8.75%, it would be increased to 10.75%, and for 33.75%, it would be 35.75% as the new tax rate. Okay, so let's see a calculation for your example. Okay, so we have a income of 1,60,110 pound. right? So how we would be calculating the tax? So firstly, let us bifurcate this. So for the first limit of 37,700 pound, you are paying 20% tax. Okay. So 20% tax on 37,700 pound, it would be 7540 pound. Next is from 37,700 pound to 1,25,140. So between this, whatever the taxable income you have would be taxed at 40%. Okay. So 1,25,140 less the 37,700 pound already charged. It is not like that whole 1,60,110 pound because it falls in the additional rate band, right? Would be calculated at a 45% rate, right? It is band wise, right? If you finish this limit, then you move to the higher rate. Okay. Then at the end, you have this something left out above 1,25,140. So 1,60,110 minus 1,25,140 would be the remaining amount of taxable income that would be charged to tax at 45%. So the total tax liability would be 58,253. Okay. Now, three things, three other things that you need to consider, three other things that you need to consider while calculating any tax liability is that firstly, you have savings income starting rate band. Now, what do I mean by savings income starting rate band? So you have 5,000 pound of savings income, which could be taxed at 0%. Okay. But there is a condition. There is a condition. What the condition is? If your non-savings income does not exceed by 5,000 pounds. So if your non-savings income is lesser than 5,000 pound, then you would be able to get benefit of this savings income starting rate band. But if it is above that, you need to forget this. It does not apply, right? You do not get any benefit on the non-savings income, but it consumes the band. It consumes the band. I will show you this in an example, so you got to understand this much more clearly. So let's say you have a savings income of 15,000 pound and non-savings income of 5,000 pound. Okay, what do you say? Does this starting rate band applies here? Does the starting rate band apply? No, right? Because the non-savings income is 5,000 pound. Non-savings income is 5,000 pounds. So whole band of 5,000 pound that you are getting, the starting rate band would be consumed by non-savings income. So the total you would be taxed on is 15,000, right? Okay. Total you would be taxed on is 15,000, that is non-savings income, and 5,000 would obviously be non-savings income that you would be paying tax on. Okay, so 15,000 savings income and 5,000. It is not like that this 5,000 pound which you are getting as a starting rate band, although we are taking non-savings income for calculation, it is not like that this 5,000 is also available against non-savings income, right? It just consumes the band, but this isn't available against non-savings income to reduce its total income. Okay, so 15,000 plus 5,000, 20,000 would be your taxable income. Next, when we talk about savings income being 15,000 pound and non-savings income being 0 pound, now you have this full 5,000 pound available with you. Full 5,000 pound available with you. So 15,000 is your savings income. 15,000 is your savings income, and if you get 5,000 of starting rate band, what would be your taxable income? It would be 15,000 minus 5,000 pound, which is 10,000 pound would be your taxable income. Okay. Next is savings income of 15,000 pound and non-savings income of 3,000 pound. Okay. Okay. So do you get SSRB? Yes or no? Yes, obviously, because non-savings income is below 3,000, below 5,000. Okay, it is 3,000. Okay, so 5,000 out of which 3,000 is consumed. So you have 2,000 of savings income starting rate band available. So what your taxable income would be? 15,000 plus 3,000 would be fully taxable. You consume the band, but it isn't applied there. Okay, it is specifically available to your savings income. So what is left now? The left is 2,000. Okay, So 16,000 pound would be your total taxable income. Here is your calculation. Now the next one is savings income being 3,000 pound, non-savings income being 3,000 pound. So here 2,000 pound again available. So 3,000 savings income plus non-savings income of 3,000 pound, less you have starting rate band being available of 2,000 pound. So your total taxable income comes at 4,000 pound. Okay, are you clear? 3,000 plus 3,000 less 2,000 pound. Okay, so this is how it works. Next are two nil rate band we have available, and it is again on the basis of some condition. One condition, that is which type of taxpayer you are, right? Which category you fall into. So if you are basic rate taxpayer, you get savings income nil rate band. What is nil rate band? Means on that income you would be taxed at 0%. No tax would be charged on that income. So if you have earned 1,000 pound of savings income, okay, 1,000 pound of savings income, it would be zeroed out, right? Because of this nil rate band. No taxes payable on it. Next is high rate band, where you get 500 pound, and at the end, if you are additional rate payer, you do not require that, pay the tax. Okay, you pay the tax. Next is dividend income nil rate band. So now this is something where you do not have any condition for every taxpayer. For every taxpayer, no condition, not dependent on any other category of income, not dependent on the rate which you fall into. You would be getting 500 pound of dividend income at the rate 0%, means no tax on it, right? So let's see some of the calculations. Two sums we are going to see, which would make this concept much more clearer to you. So Jean's income for the tax year 24-25 is as follows. So we have state pension, which is 6,587 pound. We have private pension, which is of 8,400 pound. And here, if you see the notes, in the state pension, there is no tax deducted at source. But in the private pension, you have 597 pound of tax being deducted at source under pay. So pay is, what is pay? Pay is a scheme by government, that is pay as you earn, where the employer deducts from your salary the NICs and the income tax. Okay, so you have already paid tax on this, right? You have already paid tax on this. What was the tax being paid on this? Was 597 pound has already been paid on this. So this would be available as your tax credit while calculating your individual taxable income, your individual taxable liability. Okay, you have savings income received of 4,800 pound. Okay, 4,800 pound is your savings income being received. So let's calculate income tax for Jean. So here is your calculation. Let's calculate it. Okay, so firstly, let's categorize all these things. State pension is a savings or non-savings income. Savings income would be like salaries and all these things, and non-savings income would be the interest, pensions, all these things. So firstly, the pensions are non-savings income. So 6,587 pound, 8,400 pound would be your non-savings income. So if we total out that, it is 14,987 pound. If we talk about savings income, we have written it separately in the box. And now again, the thing you need to understand is that you cannot apply the tax rates based on your what you think it should be. Okay, there is a clear rule. There is a clear rule that you should hop over from non-savings to savings and then dividend income. Getting, you should firstly tax your non-savings income. Okay, you should firstly consume non-savings income under your band, then go to savings income, and then tax at the end dividend income, because they know, you would be preferring dividend income to be taxed firstly. Okay, so what should you be doing? Non-savings income, then savings income, and then dividend income. If we talk about personal allowance as well, you should firstly consume your non-savings income as here. Like so, let's say it is 50,000. as your salary. Let's convert it into number. So firstly, the personal allowance would be applied here, and then if you have something left, then you would go to savings and dividend income. Okay, so these are our taxable income. 4,800 pound is your savings income, and non-savings income is 2,417 pound, because you have applied 12,570 of personal allowance. Okay, do not worry, we would be studying personal allowance in next few session. Okay, so total is 7,217. So do we have the starting rate band applicable? Yes, it would be, because non-savings income is 2,417 and it is lower than 5,000 pounds. So 5,000 less the band is consumed less 2,417 pound. 5,000 less 2,417 pound would be 2,583 pound. So this is the savings income that could be taxed at 0%. So firstly, let me tax the non-savings income. This is 20%. And then when we move to savings income starting rate band, we have 2,583 pound of 0% tax. Now we have nil rate band as well as applicable. So your total income is 7,217 pound. Your total income is 7,217 pound, which lies in the basic rate band. So what do you get is 1,000 pound of nil rate band. Okay. So now if you remove all these things, 2,417 has been taxed, 2,583 has been taxed, you have 1,000 pound also being taxed. So whatever left would be taxed now under savings income basic rate band. Okay, 7,217 less 2,417 less 2,583 less 1,000 pound of which is our new rate band. Okay, so it would be taxed at 20%. Now it is necessary to deduct your tax credit. You have already paid via payee tax of 597 pound. You already paid 597 pounds. So why won't you take credit? So less 597 pound, the tax liability would be 726.8, which was the total tax coming as payable, less whatever you have paid in advance. Okay, so your tax liability is 130 pound. Perfect. Now let's move on to next question. There are three taxpayers who have same dividend income, but they have different level of other income. So dividend income is stable at 12,000 pound, but the salary they are taking is totally different. First one is 21,500, next is 47,500, and next one is 1,60,000. Okay, we have applied personal allowance on first two, and low would not be eligible for personal allowance. We would see why he won't be eligible for personal allowance. So the taxable income they have provided to us. So if we calculate the tax, so if we calculate the tax, so the total taxable income was 2930 pound, 2930 pound. We have got non-savings income basic rate band firstly at the rate 20%, right? At the rate 20%. So about 12,570 pound, we have got 20%, right? So 1,786 pound is your tax liability for this particular like basic rate band, right? Next is you get dividend income nil rate band. So 500 pound is your dividend income nil rate band. So whatever is left now, so 12,000. So 12,000 you have dividend income. So if we take the total taxable income, it was 20,930 pounds. So 20,930 pound less you have already taxed. You have already taxed 8,930 pound. You have already taxed 8,930 pound. How do you arrive at that? 21,500 minus 12,570. 8,930 has already been taxed. So 8,930 pound less dividend income nil rate band of 500 pound would be multiplied by you are still under basic rate band. Okay, you are still under basic rate band. So it would be 8.75%. So your total tax liability would be coming at 2,792 pound. Right? Now if we move to income tax of Kyle, the total taxable income was 59,500. Non-savings income, what would be the non-savings income? 47,500 here, if you see. So firstly, we applied the personal allowance to the non-savings income. So 47,500 minus 12,570. So it would be 20%. So it totally falls in 37,700 pound. It totally falls in 37,700 pound, right? So it would be taxed at 20%. Now we have dividend income of 12,000 pound. Now you need to check. You already have this dividend income nil rate band of 500 pound, which is available. So what is left under your basic rate band? So again, the nil rate bands also consume your band, right? Although it is zero, but it consumes your band. Okay, so if we see, out of 37,700 pound, you have 34,930 pound being taxed under non-savings income, less 500 pound, which is consuming your band, although charged at 0%. So whatever is left would be 8.75%, which is our basic rate band. Okay, so basic rate band would be this. Now, over and above that, we would be having a tax of 33.75%, because we are getting into higher rate band. If you see the total pay, the total taxable income is 46,930 pound, which is higher rate band. So over and above 37,700 pound, and you are also this dividend income, if you consider, you would be paying 33.75%, because you are in dividend income. Okay, so if you total it out, your tax liability would be 10,300 pound. 10,300 pound. Okay, perfect. Okay, now this one is your homework. This one is what you should try yourself to see if you have got grasp of this concept. So 1,60,000 pound of salary, dividend income of 12,000 pound. So the total comes at 1,72,000 pound. No personal allowance available. So taxable income of 1,72,000 pound. Prepare this table. Prepare this type of table. Take the limits. Calculate the tax rate. Apply the nil rate bands if applicable. Okay. Apply nil rate bands if applicable. It would obviously be applicable for dividend income, because there is no limit. There is no threshold over which you can claim dividend income nil rate band. It is applicable to all the taxpayers. Okay. So yes, you can work on it. So this was the session where we discussed about the bands and types of starting rate band and nil rate bands we have available. In the next session, we would jump over some of the exempt income. We would see a brief of it, and we would also talk about personal allowance, right? What is personal allowance? What are the limits? When do you get it? When do you not get it? All the things will be covered in the next session. So as for that, let me know in the comments if this video was helpful for you, and comment out which attempt you are appearing for ATX, and would continuing this series be helpful for you or not, and any other video that you are expecting from us, we would surely love to make it. As of now, like our video, share with your friends who are pursuing ATX, or overall ACCA if they are pursuing, because we have many other videos as well, not just ATX. Subscribe our channel and turn on the bell icon so you get the notification whenever we publish a new video. So thank you. Bye bye.